I want to thank everybody, all the attendees who have signed on. Welcome to our webinar today. The topic of the conversation will be the benefits of Cpase financing for commercial transactions. But before we get started, I want to thank Anthony Kazazis of the New York City Real Estate Group networking group for putting this on. Appreciate that. And again, thank you everybody who signed on to listen to our conversation today. I am joined by Adam Lipkin of First Vice President of Greystone, or better known in the industry as the Cpase guy. So we'll have some really great insights into how to utilize Cpase and what Cpase actually is. My name is Mike Boggiano. I'm Director of Commercial Originations for LendingOne CRE. Again, I'm joined by Adam. Adam, why don't you give us a little background and some words about yourself?
Yeah, I'd love to. First of all, I'm happy we finally get a chance to do a session together, my friend. So appreciate the invite. It'll be a great conversation. And just by way of background, name's Adam Lipkin, known as the Cpase guy on LinkedIn and in a lot of circles. And we've been in the commercial real estate finance industry for now about 15 years. I'm at Greystone. I'm in a specialty group within Greystone that really focuses on construction and transitional financing, like bridge projects. And Greystone, just by way of background, 35-year-old, probably one of the largest privately run commercial real estate finance companies in the industry, leading FHA HUD lender for a decade plus, and one of the top agency lenders. But there's so many other products within the platform that range from CMBS to bridge. And one of the key roles that I came on to help out and roll and really expand was our construction capital program. And so, of course, the other hat that I, took on, almost as like the informal in-house Cpase guy, looking to see where we could be able to, mix Cpase and permit it across the platform as well as outside of it when we might be placing capital. So, have a few lenses I'm going to be talking about Cpase through today. Primarily today as a lender and advisor, and where it could fit and sit in the capital stack. But just kind of backing up a second, Mike, you know me that I had been a direct Cpase capital provider for about 4 years before this. And so, also be able to be at a direct national shop, having transacted in the hundreds of millions of dollars with Cpase and Cpase friendly lenders. We're gonna be able to talk about what works and what doesn't, and some of the in the trenches examples. So definitely could talk to a few different hats that I've worn historically and then now. So great to be here with you.
My favorite story about Adam is that about 8 to 10 years ago, we were up in Orlando at an ICSC local event. And Cpase was just about rolling out, and we were at a breakout table together having conversations about loan programs, and here comes Adam talking about Cpase, and I'm like, hadn't heard about it before, but you had such a passion and a knowledge about the product. You definitely were a pioneer, one of the early adapters of Cpase finance, and so it's an honor to have you on this panel discussion. Yeah,
for sure. I remember it was actually, I think it was like a Florida ICSC conference, and it was 5 years ago, my friend. I don't think it was
5
years ago. 5 years ago. Feels like 8 to 10 years ago. But I remember because I had just got into it. I found out about it in the summer of 2017. And I was like fascinated. I'm always just intrigued by new things, innovative things. That's always been something I gravitated to, even early on in the commercial real estate finance. In the last cycle, I always found it really just very exciting to put together creative capital solutions. Oftentimes I was finding myself mixing some type of senior mezz combination to just do something a little bit more out of the box for a client and help achieve a little bit more outsized returns. And so Cpase was one of those things that instantly hit me as wow. Like, how often do you come across a new financial product in the industry, right? And I started to ask around about it. So I remember I was at the conference and we probably had one of those conversations. I'm like, hey, have you ever heard about this thing called Cpase? And you're like, C-Space or something like that. I'm like, Cpase, and so, so I was, so I was just intrigued, because I was also in the CMBS space in the early 2000s. I was at LNR way back in the day. And when you think about CMBS, it really had its start in the 90s. And it also was a nascent industry that had a trickle volume. A lot of people were like, what? You're going to do what? You're going to package these loans and you're going to securitize and sell that. And then look what it became. It became a monster industry that did, in the hundreds of millions and then billions a year. And so I said, wow, this Cpase thing could really become something over the next decade plus. And we'll talk about how it's evolved. But I was very intrigued by it. And I dove in and I said, I'm always, thinking from the marketing hat as well. Let's go with something that you have that as like your handle. So I I trademarked the Cpase guy back in the day. And so I usually have that as somebody who will typically stop me at a conference and say, hey, Cpase guy, so that's always fun too.
No, yeah, I mean, if you go on your LinkedIn profile, it says Cpase guy. It's a great moniker to have. But okay, so let's jump into the conversation. I mean, a lot of folks, there's some ambiguity around what is Cpase. How do you use it? I mean, well, let's just start. What is Cpase financing?
Yeah, I mean, there's still a ton of, I would say, not even just lack of information, misinformation. So often I'm like educating about what it is. So let's just kind of go over what is the acronym Cpase. So it stands for Commercial Property Assessed Clean Energy. So even like that, so what does that even mean? They got to. I feel like they should change the CE to capital expenditures. But high level, the PACE program, and I had some slides that I did recently for another presentation. I'm just gonna pop these up just so let me know if can you see this okay?
Yes.
Yeah. So I'm just gonna have like this is something I can read from while we're talking, but people call it a public-private partnership. We kind of question that. It's public sponsored, but it's all privately capitalized. And so, really you have this outline structure that it's state enabled. So different states, in an effort to be able to spur buildings to have more energy efficiency and sustainability, resiliency, decarbonization. There was a lot of thought. This is kind of going back to around 2008 was when California, which was the first state, enacted this legislation, this enabling legislation. And it essentially what it does is it creates an outline to incentivize property owners to invest in their building, all these types of measures that would affect the energy bill. We're talking about things like your lighting, your HVAC, insulation, and giving you a unique way to be able to pay it back through long-term fixed rate, non-recourse financing. And so, we'll kind of, if you could picture Cpase and where you could use it, I think of it in terms of three key buckets. Retrofits, which are really using Cpase financing and, dollars that would be for stabilized assets. You have an existing piece of real estate, somebody wants to, put in new lighting, they want to maybe do a roof upgrade. Those are considered retrofits where you want to maybe get some financing and maybe use the Cpase tool to maybe be able to finance some of those costs. Secondly, there's a bucket that we're going to call for ground up. So somebody's going to be developing real estate and they're going to be looking to see how much of the Cpase financing could be available for their development project. And then third, we're going to call it retroactive. This is really somebody who's already spent some money that qualifies for Cpase and they're now going to be looking at trying to get reimbursed some dollars for it. So the universal, I would say common denominator is it's still going to need to be dollars that are going to cover these eligible improvements, whether it be lighting, HVAC. I have a little bit more of an extensive list in a follow-up slide, but whether you install these items in an existing stabilized asset as a retrofit, you're building and you have all these same things as part of your hard and soft costs, or you've already done some work, whether it be on an existing or a new asset, and you're looking to get reimbursed. Kind of picture those three categories is where you can think about using Cpase. So that's good to just keep that in mind. I'm just going to kind of go through a few of these other bullets and then we could, kind of go into a little bit of dialogue, but there's state by state requirements. So while there are some just universal characteristics, like every state is going to have eligible improvements that include energy efficiency. So lighting is going to be included in every state, your heating, ventilation, cooling systems is going to be included. But then some states actually have even more of expanded items. So like in California, there's resiliency items that include seismic retrofitting to harden a building against possible environmental risks of like earthquakes. In Florida, for example, measures could include things that can make your building more resilient to hurricane force winds, right? So impact windows and doors is a very big item in Florida that's covered under PACE. Hurricane resistant roof. So that's a bucket in some states that they've included that as part of the legislation. And then other states have even included things that are part of their initiative to help decarbonize buildings. So New York, for example, is very focused on decarbonization and how to make sure that you're building with more sustainability measures and decarbonizing your building. So it's important that, when you do start to look into Cpase financing, I always say, speak to an expert, probably have two, and really get a sense of what is covered in your state. And so, even just kind of going with that in mind, it's important to be aware that PACE is not available everywhere. It is one of these things that is enabled state by state. And then because it is this unique structure, when I mentioned this acronym, this property assessed clean energy, it uses an assessment, a non-ad valorem assessment, as an ability to get the repayment, right? So if I'm a lender, and you know this as well, typically my security is I have a mortgage, right? Like I have something I can actually have as my secured interest. The difference is if I'm providing financing and I'm a Cpase lender, my form of repayment is that I get to have an assessment added to the property and I get to get paid back with the tax bill. So that's one of the very nuanced structures. That's really the only public component of Cpase, is that you created a structure where the different states enable this ability to add this assessment for lenders to be able to get paid back if they provide any financing for a property that has these things included. So they call it a special assessment.
So Adam, even though it's state approved, does it also have to be county approved in order to have the assessments?
It does. And what happens is the counties opt into the program. So it's like, we call it like a dual opt-in program, where you essentially have a state enable the legislation that makes it potentially available in the state. You have a program that gets stood up, and then municipalities say, we're going to opt into these programs, right? So it could be at the county level and or the city level. So it is important to drill down to that local level. That's really one of the first characteristics. If anyone's even thinking about Cpase, it's good to just say, is it available in my jurisdiction? There's a great resource, which I'm going to highlight just in a couple of slides, but also just having like a good person who's a Cpase lender to be able to ask, hey, is it available in this area? You usually can do that. You don't have to necessarily disclose an address. You can just say what city it's in. Like if you're like, hey, I'm looking at a project in Aventura, Florida, or New York City, you could usually get pretty quick feedback, whether it's active or even pending. There's a lot of markets that are maybe not necessarily active yet, but they could be in the next 3 to 6 months. So just one example that I'm in the middle of some activity is in Seattle and the Bellevue area. A lot of these markets for years, people are having projects. They want to know when things are coming on board. So that market just had come on board beginning of this year, I believe it was, and there's been some activity there. But usually just checking in with somebody that's probably an active member in this Cpase arena is a good bet. And there's a resource at this Pace Nation. Do I have it over here on the slide? That's not there. It's pacenation.org. So PACENATION.org. That's a really great industry organization that has some good resources on it. That's just good for all the viewers to be aware of. Tons of insight, tons of papers, but good to keep that in mind. Let me just go through these last 2 bullets, and then we'll kind of get into some of the Q&A. But what's interesting about the form of this, this financing is it's tied to the useful life of these projects. So you could see financing that's spread over up to 30 years. So imagine this: somebody has like a roof that they need to get done on their existing industrial asset, and rather than maybe come out of pocket $2 million, they could spread that as financing over 30 years potentially, and have that show up as like an annual payment of maybe 200 grand extra a year. So it's very interesting the way that you can be able to spread out these payments over quite some time. In a development project, you have such a bundle of improvements that it's going to be tied to the longest useful life of it. So oftentimes you'll see on a new development, somebody might be building a $50 million apartment. You oftentimes see close to 20% of the combined hard and soft costs of that budget be eligible. And so, maybe out of that $50 million project, maybe 10 million might be eligible for Cpase, and you'd be able to potentially have that with terms that might look like up to 20, 25 years with flexible prepayment if you wanted to be able to exit it earlier once maybe you stabilize and want to take out a construction or bridge loan. So it's very interesting how the term is structured more to the useful life rather than what we typically do as lenders, where it's going to be more tied to a cost of capital, the 5-10 year debt, determining whether your business plan is short term or longer term. So it's a little bit of a nuance there. And then just the thing I had mentioned before is that just by nature of being a tax, you have to act as a tax. So there's no rights and remedies the way that a lender has to be able to, have default provisions. There's no financial covenants. It really is a very passive tax assessment. And so in some ways, when we start talking about pros and cons and how lenders look at it, we'll see that where, some folks maybe have a little bit of concern about it showing up at a priority of a tax level. The flip side of it is having, that need to act as a tax and not having any rights also is a nice mitigant. So anyways, that's a little bit of a high level about Cpase and the structure. And we could kind of bring that back up when you want.
So it's interesting to me that it's fully prepayable at any time without penalty.
So it's not fully prepayable without penalty, right? You can be structured all sorts of ways. So usually what I find people doing, and my involvement had, been mostly using it for construction. So oftentimes people want to use Cpase as a way to be able to maybe either replace out more expensive construction debt. So the rate of Cpase, it's so funny, like back in the day when we were talking about it in 2017, I want to say the rates were maybe in like the 7-ish range, right? And then they came down to 6 and 5s. Today, I would tell you that the rates are in the mid to high 4s to low 5s, by and large. So you're continuing to see this downward pressure on the rates as there's more competition, more volume. And I think you'll just continue to see that. I think you continue to see, I wouldn't be shocked if in the next couple of years, you might see the rates creep down even further. And it's extremely interesting in this rising rate environment, how this might become even more attractive as a real nice way to secure long-term fixed rate financing. I mean, when you think about locking in at maybe a 4.5% to 5% rate for maybe up to 20, 25 years and having the ability to pay it off, or, it could be actually par after several years. So I'll tell you about some of the prepaid structures that usually exist out there. But I think that's getting much more attractive now than a few years ago when we were in a much lower rate environment. The Cpase is higher. There's a little bit more of a spread of it. Now it's really coming quite a bit. But in that regard, while you do have to have this self-amortizing structure largely maintained, there's lots of abilities to maneuver within a loosely defined structure that's set up at a state level. So I'll give you a couple examples. For construction, it is almost universally done where you're going to have an interest-only period on that Cpase amount. You're typically not going to be amortizing during that construction period for 2 to 3 years. You'll usually see a Cpase structured where maybe somebody has a 25-year term with the first 3 years be interest only. So that's one thing to be aware of. 2 is that pretty much every provider of Cpase builds in some kind of flexible step-down prepay. Now, I've seen things ranging from like 5, 4, 3, 2, 1, right? Like during construction, a lot of times folks might say, you don't really need to worry too much during a construction period about paying it off. They might be focused more on like year 2 or 3. But it's a little bit of a give and take. Like if you want to have an earlier ability to pay off this Cpase and at a lower amount, it might translate to 10, 20, 30 bips wide of a spread, right? So it's a little bit of one of those customizable instruments. Some Cpase financing providers have a little bit more of an ability to do that than others. It is one of those things that's similar to like, us acting as lenders. There's certain product types that we like more than others. There's certain profiles, whether it be construction or bridge or perm. It's actually the same exact thing with Cpase, where it's not like everybody does the same thing. There's some Cpase providers that don't touch construction. There's some Cpase providers that don't want to look at certain asset profiles, like we'll call it hotels or senior living. So it is much more nuanced, and it's important to bring that up because some folks think, oh, it's like some government program and it's a one size fits all. And it's actually almost zero involvement from the government. Once it's set up in a market, it's all private market driven. I mean, it is really largely between the Cpase provider, the senior lender, and then you're generally acting within some loose underwritten guidelines to make sure that you're in compliance. But the senior lender is going to determine how much they're going to allow. The Cpase provider is going to determine what's appropriate and what they want to do. And they're also going to determine where they could be stronger. So some Cpase providers might say, we could get really aggressive on earlier prepayment, and it's going to be based on their source of capital. In the same way that lenders have sources of capital ranging from high net worths and funds. It determines, could they structure earlier exits? Could they have more competitive rates? So it's just good to kind of use that as an opportunity for people to get that there are real nuances to who is providing the Cpase. It's not just, I'm just going to, pick a Cpase provider out of the hat and they're all going to be able to do the same thing.
That's an interesting point because you do have in the capital stack, you have a senior lender, which is traditional lender, but then you have the Cpase provider, which is separate from the senior lender. So it's 2 separate transactions. And I think a lot of people think it's Cpase financing. I'll just go to a traditional lender. I'll get it first, and then they'll provide the Cpase financing. But it's actually 2 separate transactions, I think this mentioned.
I have this great quote that I've been saying for years where I say Cpase is a partial solution, and without a friendly lender, it's no solution. And it's so true, because in reality, Cpase is one of these things where it's a tool, it's an available bucket, but if you don't have a lender that's going to work with it, then you can't do anything, right? And so it's like a lot of these things we think about, like, how do we want to look at it? You kind of look at things that you're already familiar with. So like mezzanine financing, preferred equity, EB5, ground leases. There's all these things that have come around, and lenders have different attitudes towards all of them. There's some lenders that say, we don't allow mezz. We don't allow, ground lease financing. We don't like EB5. We want to have borrowers that have a certain amount of direct equity in the deal. So it's no different with Cpase. It's newer, so some lenders don't even have a playbook for it yet, right? So it is really important to have a good handle on, are you already in a project where a lender is comfortable with it? Ideally, they've even closed the transaction with it, and then know how do they underwrite it? What are their guidelines? It's one of the most important things, and it's usually good to get that earlier than not. I have a great list of lenders that I usually share with folks that gives them a sense of like who's a little bit more active than not. And it's also important to know who's active for what profiles. Just because you might see a lender on a list that maybe they did a Cpase deal where it was a $50 million mall or a $100 million mall, and maybe there was a $1 million request for Cpase, so it was nothing. And the annual amount on that $1 million was $100,000. Just because they allowed it there doesn't mean they're going to allow it on your $50 million construction project where maybe you're asking for $10 million of Cpase. So it is really important to know, who the lender is, what they've historically done with Cpase, and also how you might approach it, because it's not something in a vacuum. I think that we can kind of jump right into this, because usually this comes up next, is how will lenders look at it? And lenders typically look at Cpase as something that adds to their leverage and something that adds to coverage needs, right? Because there's an obligation to repay a dollar amount, right? If you're taking out financing, you have to pay it back. So usually folks are going to pay attention to what's the combined coverage that they're okay with between the coverage they need on their existing debt, as well as the coverage that's needed to, cover the Cpase annual payments. And then also, a lot of folks want to know what kind of combined leverage between the loan and the Cpase am I comfortable with. So just a very simple example is, let's say somebody's building a $100 million apartment development and they're seeking 80% non-recourse financing. Well, you might approach it. You might be able to go out and get a non-bank, maybe a private lender will still go maybe 75, 80% leverage. It'll be higher rate. And it might be at a 7, 8, 9% rate range, let's call it. And you might say, oh, could I use Cpase here? And the answer is you have to look to see if it's available in that jurisdiction. But if it is available in the jurisdiction, it would be likely that about 20% of that $100 million budget could be available for Cpase. However, it still comes down to what is the lender going to allow, right? And so let's say you have 20 million, you already had a lender that is going to do 80. Is the lender going to do 100 million? No, right? You're going to want to see some equity in the deal, right? But what they might do is they might say, well, the Cpase is priced at 5%. Maybe I'll replace 20 million of my 8% dollars with Cpase. So I'll maybe do 60 million of a loan, and maybe I'll allow 20 of the Cpase to get to that 80, and I can blend down that cost of capital. So that kind of profile is a transaction that I've done several times over the years, and it's helped to be able to reduce the overall financing costs. And a lender's going to pay attention to, could I take out my construction loan and that Cpase amount once this project is built and stabilized? The takeout is so key. It's no different than what you're already going to pay attention to. Could you get out of it? And they're going to just say, add the Cpase to it. Could I get out of the Cpase as well?
Great point. Great point.
I'm bouncing all over the place, but I know we got limited time, so I want to just cover all the broad strokes.
I think from a senior lender perspective, it's gaining wider acceptance in the market over the years, and as we continue to go forward, it will continue to gain more acceptance from lenders as they get a better understanding on the nuances of how it works.
Yeah, for sure. I mean, like, for example, what I'm doing on my construction capital program is I'm going to size it to my agency takeout. And as long as between my construction loan and Cpase, I feel that I can get out in an agency takeout for both, I'm going to be open to it. But I'm also going to make sure that there's the right business plan, it's the right sponsor. And so I always joke that, if somebody shows up with a Cpase request and maybe it's their first time developing and there's all these other things that you maybe are a little questioning, it's not a matter of the Cpase being the challenge. It's that you're going to have a tough time getting a loan, period. Right. So I think it really comes down to, what's the overall package look like? First and foremost, who's the sponsor? Is it a sound business plan in a market where this makes sense? For those folks that have those criteria, you have more leverage to use this tool to maybe get more competitive terms. You might have a handful of lenders that want to do this project. You might throw into the mix, hey, we're considering Cpase. How much could we use to be able to insert in this transaction? So you use it as a tool. Don't be dependent on it. That's the big takeaway, is don't feel like you have to have the Cpase to make it work, but have the ability to use it and insert it. And I think you have more leverage in those cases where there's more of a competitive process, when there's more lenders that are interested in doing business with you and they like your project. It's easier for you to say, we're thinking about this thing. What amount of it would you be comfortable with? Have you ever done anything? Usually having an advisor or somebody that could direct you towards, hey, this is a group that we've had success with, or even the Cpase provider a lot of times could say, oh, I've had success with such and such lender. Like, I oftentimes did that. Like, I would typically bring the lender with me to brokers that I was working with, saying, hey, who could I get this done with? I'd say, oh, talk to ABC company. We just did a deal with them. So I think you got to leverage your team, whether that be if you're working with a broker or you're working with a Cpase provider, find out like who they've worked with. But I think it's not a black and white thing. Like, you'll either accept it or you're not. It's like, at what level could you accept it? And I think more of the attitude that it could start to evolve to.
So, Adam, there are certain lenders that have sustainability requirements, right? The agencies will give you a pricing break, correct? And certain banks will give you a pricing break if you can prove up that you're adhering to sustainability.
Yeah, but it's sustainability and Cpase are two separate things. You could fulfill on sustainability by doing things to your property, and you don't have to do Cpase, right? So the agencies have green programs. Today, right now, Fannie does not allow Cpase. Freddie is very conservative with it, to the point where there's been zero Cpase transactions done with it. They underwrite it as an operating expense above the line, which is just extremely conservative. It's a financing charge. There's probably going to be, hopefully in the not too distant future, maybe a little bit more of a relaxing around some of those conditions. But right now, today, the attitude, if somebody is using Cpase to develop and it's a multifamily asset, you typically need to underwrite it assuming that agency loan is going to be able to pay off the Cpase and pay off that construction or bridge loan. You really can't make an assumption that Cpase is going to run with an agency loan, because it's just not available yet. So hopefully in the future, but not yet. So.
Gotcha. I think we're butting up against our time limit. I want to thank everybody that joined us, but more importantly, I think this is an area that you need to have an intermediary that knows the ins and outs of the program. Adam has been, like I said, he was a pioneer adapting this. I thought it was 8 to 10 years ago. I guess it was 5 to 6 years ago, but
it feels like
there's a lot of information, and like you said, there's a lot of misunderstandings out there in the marketplace and how you can utilize this program. But it's a great tool to be able to increase the capital stack, and it's a benefit for the borrower. But again, I think you need an intermediary who understands the programs and financing options that are available, and I would recommend Adam as that intermediary.
Yeah, and obviously anybody can reach out to me. I mean, I'm very active on LinkedIn. If you have any questions about it, it is one of those things where we probably need more than a half hour to really get into it. But I think just having it be on the radar, and then people now know this is a tool, maybe find some expertise from somebody out there, myself or somebody else, is a lot of people in the industry that can help out. But get educated on it. It's not going anywhere. It's only been increasing. It did about $1.5 billion last year, up from like in 2017 when we were looking at it, when it was like, I don't know, maybe like 100 million, and we're expecting it to probably be closer to 2 billion this year. So it's growing quite a bit. The best bet is just to ping me on LinkedIn or my email. It could be either or. I'm happy to share some of it. So,
and everybody will receive your contact information along with Mike's as well. Guys, this concludes our webinar, and I want to thank you, Adam. Thank you, Michael, for being the sponsor and bringing Adam on as your guest. It was very impressive to hear. Very impressive. And I learned a lot.
We got to do it again. We'll see you soon.
Anthony, thank you for putting this on.
We got to get him to be a speaker at the MBA, Michael. We'll talk about that, in the future. I'm sure Bob would love that. That's interesting. I want to thank you. Thank you, Adam.
Thank you.
Thank you, Michael. Guys,
All right.
be well. Thank you, audience, as well.
Thank you,
Take
guys.
care. Everybody be well. Bye-bye, guys.